Home prices are shifting fast. Interest rates have everybody on edge and a bit nervous. And there's one shocking trend that's going on right now in our Denver real estate market that if you're thinking of buying or selling in 2025 coming up, you really need to pay attention to. And we're going to go over all of that here in our December monthly update. It's the beginning of the month. It's my favorite time of month where we get to geek out on what the numbers are doing because I love to look at the headlines and then completely ignore them because I'm looking at statistics on what's actually going on in our Denver market. So welcome. We're going to just dig right into it and find out what's going on with your biggest asset, your home. And if you want to know your current home's value, just go down, link in the description below. You can just click on an automated home valuation and kind of keep track of what's going on. Let's just go right into it. So what we have here, starting with supply and demand, as we always do, right? New listings, inventory is the driving force. All we've been hearing out there, right, is that there's more stuff on the market right now, which are driving prices down, blah, 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 blah. Well, it's kind of a tale of two stories here. There is more inventory right now, but we also have sellers kind of stuck on their price, which is balancing things out. This is the most balanced market I've ever been in since 2010, since I started this business, right? So new listings, this is what's interesting. We're looking at a 5-year chart here, okay? It's just like a heartbeat. All these numbers just are seasonally. We hit highs and lows on close price and the amount of listings and all that. Now, new listings are down to 4,731 new coming on the market. I mean, that's a significant drop month over month from 7,800 down to 4,700 month over month. December's usually the low. We can go back and look at last year. December was the low then. The year before, December was the low in 2022. So we're on the same exact trend. Now, year over year, new listings is only up by 2.5%. So essentially flat, right? Flat on new listings year over year, which is a good thing. Kind of means we're balanced compared to last year for new listings. But active listings is where we have the biggest change, right? So we're at 17,500 for the entire Denver metro area. Okay. This is including all the surrounding suburbs of Denver metro area. And so it's quite a bit more than just Denver proper. 17,500 compared to last year is up 23.5%. So last year we had 14,143. This year we have 17,467. That's a significant jump, ladies and gentlemen, like 23% more in most any market. Anytime you have that much more inventory, you're going to have suppression of prices. But again, I'm going to get back to this. I'm going to show you some interesting stats here in a few that make us all kind of shake our heads and go, what the heck is going on? Equally as crazy as the Fed dropping rates and interest rates actually going up. Like, I don't know. This is where I even get confused as to what's going on. Someone with some financial degree in economics or someone could probably tell me why. They could probably make up a bunch of stories. But yeah, we know everything's just a little weird feeling out there right now. Okay, that's the best way to describe it. So new listings, same. Active listings, way up from year over year, but dropped month over month, meaning stuff's going under contract. But pending listings is dropped month over month. But again, it is up 23% year over year. Last year, we had 4,100 go under contract in November. This year, we had over 5,000. Significant jump. So active listings is up by 23%, but so is pending listings. So what that's telling me is that the inventory out there is getting absorbed. Okay. Whether that's properties being withdrawn or expired off the market, which is a big part of it, it just tells me that things are getting absorbed back into the market. The market is doing what it's supposed to do. Okay. Closed listings down month over month, as is normal, went down from 6,000 month over month to 5,100. But again, we're up 11.3% year over year. Last year, we had 4,600 close in November. This year, we had 5,100. Like, again, that's a good thing. Like, this tells me that people are kind of tired of waiting, or they've waited for a couple of years, realize that interest rates aren't going down. Inventory isn't flooding the market, therefore suppressing prices even more. Like, we're seeing small corrections, but it's in micro markets, right? The condo inventory out there right now is having an adjustment, but it's starting to get absorbed by the market since the election is over. Townhomes are struggling a little bit. Same with condos. Single family there's two different segments. There's the stuff that everybody wants, which is in the middle of the neighborhood, homeowner upgrades, things like that. Flip properties are struggling, as are rentals that are selling are struggling, right? Stuff that needs fully updated. And so there is some opportunity there, right? If you're a first time home buyer, you're on a budget, which heck, we're all on a budget right now. It's an opportunity there with some of these categories of houses that are sitting there, right? And if you want any advice on that, give me a call. My phone number's down below. By all means, I'm happy to chat with you about it. Now, getting back here to days in the MLS. Okay, we're gonna look at the average. I like that more than the median here. Up to 54 days on market. How does that match up to last year? Well, last year was 45, so up by 20%. But that's not crazy. I mean, 9 more days on the market on average. But if you're going to sell your house, expect 2 months on the market, depending on how you're priced. If you're pushing the price, expect that to be 4 to 6 months of being on the market or more. Appropriately priced, you're still sitting there for 2 months before going under contract, and then you have another 30 days to close. This is not 2021 or 2020 where things flew off the shelf. You're going to close in 3 to 4 weeks, move on with your life. You have to plan appropriately these days if you're a seller. Okay. All right. Month supply of inventory dropped like a rock, went from 3.6 months down to 3 months. That's still up 20% year over year. Last year, we had approximately 2.5 months of inventory. This year, we've got 3 months of inventory. Okay. So, what this means is if no new properties were come on the market today, how long would it take to sell out of every single property? Now, we know that that's not a reality, but it's just a benchmark number. Normal average buyer sellers market that's balanced is supposed to be 4 to 6 months. I think this benchmark number has changed. I think that it's no longer the norm to be balanced at 4 to 6 months. I actually think it's more like 3 to 4 months. Why? Because we're no longer moving every 5 to 7 years. I mean, I don't know what the average time is that someone lives in a house, but I'm guessing it's well over 10 years now. So people are moving less as things become more and more expensive, and properties are being handed down, and no one's selling unless they have to. You don't have many of those move up, lateral mover buyers, even downsizing buyers, right? We don't have a whole lot of them. And so I think that's skewing the numbers. I think we're looking for 4 to 6 months as a balanced market. I don't think that's the case. I think this is as balanced as we get. I think if we get north of 4 months of inventory, I think it turns into a more extreme buyer's market. But given the time of year, we're not going that way. Inventory is going to continue to decrease over the next 4 to 6 months, approximately 4 to 5 months. And then it's going to start ramping up again coming into June. Okay. So time things properly. If you're on the sell side, March and April are your two best friends. If you're a buyer, now is your time, not a month from now, not 2 months from now. Now, okay. Now, don't call me in 45 to 60 days and say, hey, I'm ready to buy a house. Well, you better be ready to compete again. Okay. That's the long and short of it. But enough with the lecture. So let's get back to the numbers here. All right. This is where we're going to divert, and I'm going to show you some interesting stuff. Percentage of close to list price. I normally don't pay any attention to this, okay? Because what this says is that in November of 2024, properties sold within 0.8%, okay, less than 1% of list price to close price. What does that mean? If you were listed for 500,000, you sold north of 495,000. Okay. What they don't tell you about this number, and you can obviously see this spike back in 2022, like 104%, of list price, everything was selling for 4.5% above. What they don't tell you is that this is based off of the current list price, not the original list price. So you could have been listed for 500,000, and if you did a price drop down to 450 and then you sold at 445, you're still within that 1% roughly, right? 446. Okay. But that doesn't account for the $50,000 price drop you made before going under contract. So this number is kind of BS. That's why I don't normally pay attention to it. But what it combines with here is something really interesting. So going on to Redfin's data center, right? I like their stuff. I looked up Denver, Colorado, and I wanted to see what price drops looked like. Okay. Now, it's not uncommon to have a lot more price drops in the winter months than the summer months. It's just cyclically what happens. But we go back. So let's take a look. August of 2022. This is a few months after interest rates started to go up. April was the peak of 2022. August of 2022. The percentage of active listings with price drops, meaning everything on the market that have had a price drop, was over 57% in August of 2022. Okay. That's how fast prices started to have to drop to adjust for the interest rate spike. Right. And so year over year in the late winter months, we're talking December, January, February, March. It tends to be the lowest time for price drops. Okay. This is the least amount of inventory on the market. Most people understand that the winter is a little bit slower. And so they're a little bit slower to, they're just not as motivated, right, during the winter months to sell. And we had 32% of all inventory on the market had a price drop. Back in 2023, in December, we had 21%. Right. So what was it in November? 38% was last November of the amount of active listings that went on the market that had a price drop. Okay. Almost half. And this year, so far in October, we were at 46%. So I would expect this number to keep on climbing based on its current trend, although it should be going down, but it's not. So let's look at this number. So half of everything that's on the market has had a price drop, right? And on top of that, everything has sold for about 1% less than its current list price. So that means that everything is selling for significantly less. I mean, what's the average price of a price drop, right? Our median sales price here is in the 600s approximately in Denver proper. So if you've done a 5% price drop, right, because you haven't sold in 30, 60, 90 days, and then you have an additional 1%, like if you went on at 600,000, there's a good chance you're closing at less than 540. Okay. Keep that in mind. That is a big number. That is a big change that these stats don't reflect. Okay. And it's primarily due to mortgage rates, right? Mortgage rates, since they announced they were dropping rates back in September, we were at 6%, and we're all the way up at 6.7% right now. Like I said, I don't 100% understand it. Someone much smarter than me probably has a good reason why, and I understand the mechanics of it and bonds being bid on, and that drives up the interest rates on it. But in reality, we hear rates are dropping, and then they do the exact opposite. Like, that doesn't exactly exude confidence. So it's exacerbated the people who are on the fence, and they're staying on the fence, right? At least a lot of people are. So something else I wanted to show you, and I'm not going to pick on a listing agent here, okay? I promise you this is likely not their fault. This is what many of us are experiencing with sellers right now, is that there's a number in their head that they heard once upon a time, or Zillow told them once upon a time their house was worth. And that number has not left. Here's why. Okay. So a little bit of psychology, right? When I used to work with car dealers, okay, I wasn't a car dealer myself. I wasn't a car salesman. I sold software to car dealers, okay? So I was trying to take money from the sharkiest of the sharks out there. My apologies. If you're a car salesman, you are very much needed, but that profession has a stigma for a reason, just like real estate, right? We've all got our things. But once someone has a car in their driveway, so big old tactic was, take a test drive. Go ahead, take it home for the night. Just, bring it back tomorrow. No big deal, right? Once that car is in their driveway, it is theirs mentally, okay? Well, the same thing happens when Zillow tells you your house is worth X amount of dollars. You start instantly deducting what your current mortgage is, how many fees you would have to pay, potential taxes, all that. And then you have this bulk of money sitting left over that since you've owned the property for the last 20 years. And that dollar left over is that number in your head as a seller. Okay. That's where you want to get to. You don't care about anything else. You don't care about the feelings. You don't care about the opinions of anybody other than you heard your house was worth this at one point, or your neighbor sold at one point for X. They got $100,000 over for their property, and now that is what yours is worth. And then they just make that their list price, not currently based on what the market is actually doing. Now, maybe they don't need to sell, right? But they would like to advance their personal life for whatever reason. And we're seeing this all over the place. And it's getting challenging to work with, to say the least. So I can look at this property here in Denver on Fillmore, and I can see an original list price of 1.8, and now they're down to 1.6. It's a $200,000 price drop, more than 10% since they went live in July of 2024. Okay, a few months on the market. Yeah, 4 months on the market. So that's a significant price drop. Then what you have a hard time seeing is what the true history of it is. Okay, so this property looks like it's been a rental before. They had it up for lease in 2020. They got it leased out, and then they put it on the market July of 2023 for $2.3 million. Okay. 3 months later, it was withdrawn off the market. Then 9 months later, they went back active on the market at 2.3. And then they did a price drop a few days later, down 400,000. Then 10 days later, they dropped 100,000. Then a month later, they dropped down another 200,000. They went under contract. Then they went back on the market. Then they had a second listing here, probably through a different MLS. Expired, withdrawn, expired, active, withdrawn. And then they tried it again in July of this year, starting at 1.9, then going down to 1.8, then down to 1.6. They've been trying to sell this property for a year and a few months now. Okay. So this is not uncommon of what we're seeing out there. So I don't know. I don't know if there's any exact advice I can give you if you're on the buy side, other than a lot of sellers right now, they don't need to sell, and so they don't need to play ball with you, right? If you think that house is worth $1 million, put in your offer, right? But know that there's a very, very small chance of that getting accepted. I'm not saying that house is worth $1 million. I'm just giving you an example. But most buyers just kind of walk away from it because they believe that even if they get it under contract, what if there's stuff that comes up on the inspection, right? Well, what are the chances that the seller's going to work with you? It seems like they're unrealistic, and so it's going to be a challenge to drag everybody through that entire process, right? Most buyers don't want to go through that. That's the interesting number, is that there's been 50% of properties on the market have had a price drop, and of those, they're selling for another 1% less. But that house there that started at 2.3, if they end up selling at their current ask price, it's going to show that they sold at their current ask price. So the numbers are just kind of, a little bit made up. You got to know how to navigate through them. So showings, right? This is another important one to set your expectations on what's going on with the market. Okay. So with our current showings, we have until you go under contract, almost 16. You have to show your house almost 16 times to go under contract. Like, that's a fairly high number. And then the amount of showings per listing right now is at 4.3 per month per listing. Some are obviously getting less, some are getting more, and it averages out. But on average, that means you're kind of on the market for about 4 months if you're trying to push price even just a little bit. Okay. It's got to be priced properly if you want to sell within the first 2 months. Okay. Now, on to the closed price, which everybody wants to know. Closed price is interesting. We are flat month over month. Doesn't usually happen in October. We're usually sinking like a rock this time of year. Okay. That happens virtually every year. We have about a 5 to 10% adjustment down from about July, August until about the end of January. Okay. So we're at about the bottom of the dip. If things remain stable over the next 60 days, right, we're likely going to rocket up and break the 2022 median price of $590. Okay. So just keep that in mind. If you're on the buy side, your time is now. If you're on the sell side, like, waiting a couple of months might not be a bad idea, and shooting for end of February till just the very beginning of May is your best time to be a seller. So if you want to know what your home is exactly worth, again, you go down in the description below. There's a link for your home value. If you want to get in touch with me, you got my cell phone down there. You've also got this QR code that you can scan. Get directly in touch with me, schedule a call. And If you want to see what happened last month, kind of, keep track of all this stuff, just go ahead, watch this video here, and yeah, keep informed about what the Denver market is doing. Hope you're well. Till the next time, happy housing.